Well, let's talk about Tata Technologies now. The company reported a steady quarter for the third quarter. Revenue growth slowed down a little bit in the third quarter compared to the first half. We have Warren Kevin Harris, Managing Director and CEO at Tata Technologies, joining in now. Warren, good morning. Great to have you with us here on the program at CNBC-TV18. We interacted during the IPO time, and it's good to have you back and speak with you again. Revenue growth at about 11.6% is slower than the first half growth of almost 15.5%. Could you tell us what happened? There was a ramp down as far as the second largest client is concerned. Is that largely responsible? I mean, and is bulk of the ramp down behind us?
Yeah, well, first and foremost, thanks for the opportunity to join you, and it's great to see you again. Q3 is typically a seasonally soft period for us on account of the festivals in India and the Christmas and the New Year holiday in different parts of the world. We did get impacted by the transition at one of our Southeast Asian OEM customers. We are at the end of the development of two electric vehicles that we've completed for that company, and we are transitioning from engineering to launch support. And so there are teams that are coming off of that engagement, and we are repurposing those teams with other customers. So the converged impact of that did contribute towards tapered growth in Q3. We began the transition within that customer in Q2. It accelerated in Q3, and we should be largely through that in Q4. And we are looking very much forward to renewed growth in the beginning of the new fiscal year.
Warren, this is VinFast, the Vietnamese EV maker, right? I mean, I'm not sure. There's enough which has been written around.
Yes, yeah, it is VinFast. That's right. Yeah,
and there has been trouble at the company. I mean, the share price there, the stocks have fallen quite a bit, etc. All of that. Is the business for you going to? Are you saying that it's going to pick up again from the next quarter on, or are you saying that you'll move on to other customers and you'll make up for this client through other work? Is that what you're saying?
We're very proud of our association with VinFast. We think that we've done great work with that company, and we're very proud of the two vehicles that we will launch together. But as with all new energy vehicle companies, once they have developed a portfolio of vehicle, their focus shifts to building brand recognition and building and selling vehicles, and we expect that to happen at VinFast, and we expect that will be their focus for the next couple of quarters. But they are building manufacturing capacity not just in Vietnam but also in the United States, and that will require at some point during this calendar year a recommitment to the investment in new products, and we expect very much to be a part of that.
Warren, hi, morning. Just to follow up there, what is the amount of revenue that was lost because of the ramp down from VinFast?
We're not in a position to disclose the specific amount of revenue at any one customer, but it was material. And the good news is that we anticipated it, we planned for it, and as I said before, we've repurposed most of the resources onto other customers and other projects.
Sure. So you can't share that number with us, got it, but you're saying it was material. 85% of your business comes from the automobile space. So just trying to understand, are you anticipating any more such ramp downs from any clients? How is the situation on the ground at the moment?
No, the situation at VinFast is again consistent to the type of volatility that we see with new energy vehicle companies. But if we step back and we look at the broader market, the demand continues to build, and we're very bullish about our prospects as we move into the new fiscal year. Despite the macroeconomic challenges that are playing out in different parts of the world, we do not see that impacting in the short term the demand cycle within automotive.
Okay, all right. Hi, Warren. Good to see you. And Nigel on this side. There was some improvement in your margins, which is good news. I wanted some further clarity. what's the outlook in terms of margins? And also, what drives your services margins that are better than the industry? And is there scope of improvement on the technology solution side as well?
Yeah, great question, and Nigel, thanks for the interest. We saw 140 basis point improvement in margins in the third quarter, but that was really largely informed by a business mix change in the second quarter. For VinFast specifically, we did a lot of test and validation that we brought in from testing houses in different parts of the world. We also rolled out a relatively generous salary increment in the second quarter. What we've seen in the third quarter is improvement in our offshore percentage. We've also worked very hard on our people pyramid and also various productivity measures, which I think is a testament to the rigor and the discipline that we've interjected into our operations. Now, I don't anticipate that we'll see 140 basis point improvement every quarter, but we are working hard to squeeze out incremental improvement in margins as far as services are concerned. I think as far as technology solutions is concerned, the end of the calendar year for our product business is typically associated with a lot of maintenance renewals in the United States specifically. That's typically at a lower margin than new product sales, and so we would expect margins in that business to improve this quarter and beyond.
Just a quick question on Tesla, which is one of your clients. The stock has been under a lot of pressure. Elon Musk has spoken about growth being under pressure as well. Your thoughts here?
Well, I think what we're starting to see is the sort of preeminence that Tesla have enjoyed over the last 10 years be challenged by every OEM in the automotive space. The pivot towards electrification and connected has very much happened, and I think that the rest of the market is making good progress in terms of capturing the position that Tesla previously enjoyed. Now, I think we've all learned over the last 10, 12 years never to count out Tesla, and I think the innovation and the advantage that Tesla has, particularly in and around their previous investment in software-defined vehicles, continues to augur well for them. But I think that what's playing out is that the rest of the market is playing catch up, and we're starting to see that in different parts of the world.
More competition, certainly. Warren, great having you with us here. Thank you very much for your time, and we wish you all the luck as you move forward into 2024. Thank you very much for joining us there.